Welcome to the Desire to Trade podcast, the podcast helping you develop Forex trading skills for more freedom. I'm your host, Pinkert. We are on episode 117. Let's get started right away. With these past two interviews, I really hope you guys got some value and that you got some things to apply. The past couple of guests really amazed me. And this week, we're keeping things really strong with another great guest, someone that I also admire. You could call him a reversal trader who's been trading Forex for several years. And he specializes mostly in trading those reversals in the market. This is a topic that I find very interesting, and I try to dive a little bit more deep with the mindset, the routines, and the strategies that are behind that type of trader. He's been also interviewing traders on his community, and he tries to share the good information that it's kind of hard to come across sometimes. You'll see that if you apply things you learned in this interview, your trading is probably going to improve dramatically over the next few weeks. But I do want to remind you that you still have to do your homework, work on your craft. That's always given. But for now, without further ado, please help me welcome Forex trader Dale Pinkert. Dale Pinkert, welcome on the podcast. How's it going today?
Oh, it's so great to be with you, Etienne, and I really love the name of your company, Desire to Trade. One thing I would say is that it's easy to have a desire. For example, people could desire to travel the world, but you still have to get on the airplane. So desire and actions are two different things. I'm sure you've discovered that. And then the desire also has to be able to persist and persevere to be a trader, because it's not all blue sky. And most of the best traders in the world that I've talked to, that I've interviewed, it's usually about a 3 to 4 year process before you really start making breakthroughs. Because one of my favorite quotes, I know you were going to ask me one, was, "You can't learn experience. It only comes with the passing of time and living through things." And in our profession, that would be screen time.
Wow, we are starting really strong. I love it. Two or three good points right there. Something that's powerful.
Okay.
And Dale, you're doing a lot of things. So you're doing interviews with other traders. You're also trading yourself. You run a few different rooms. But tell us maybe just more general what you're doing these days and what's up with trading and all the other things around.
Okay, well, I'm the host of a community called F.A.C.E, F-A.C.E, and it stands for Forex Analytix Community Experience. And I'm part of a great team. In fact, I interviewed almost everyone that's on the team when I was at FX Street as the anchor of the live analysis room, which includes Blake Morrow at Pipsar, Gregor Horvat, who won awards on FX Street at Gregor Horvat, Nicola Duke at Nick Trades, Steve Olgi, and Stelios Kontos. So we believe in the team effort. And what's cool about this company, and it's pretty rare, is that each one of the traders / analysts that provide research and actionable ideas, they all come from a different discipline. Like Greg is an Elliotician, Nicola does harmonic work, Blake does basic technical, Steve Olgi does candlesticks, and Stelios does macro. And then I teach, what I'm well known for is my work with RSI, and I've actually renamed it from Relative Strength Index to the Real Simple Implicator. And along with that, I teach 3 drive formations, which usually are some type of wedge formation, and teach people what you could do with RSI that's actionable besides having it tell you something is overbought or oversold. So that's mainly what I'm doing right now. It's for an hour and a half each day, running the community, and then after the hours, I go into our private trading room and collaborate with people. Etienne, I don't know about your experience, but I'm a big believer in social trading, because all of us traders only have 2 eyes. And when you're working with people that are competent, and also tell people to surround themselves with traders better than them, is that there are many days I walk in like a blank slate. It's kind of like I'm not afraid to say I don't know. if you find yourself going from instrument to instrument saying, I've got to find a trade, what you have to do is turn off your platform, because the best trades hit you right in the face, and they're so compelling you can't avoid them. And within a community, I may not be looking at what's happening in the guppy, but someone would post a chart and I go, that's compelling. And it kind of lines up with my work. So it's really a great way, and I really recommend traders. Some people like to filter out all the noise. I'm a big believer in intelligence gathering. So that's what I'm doing every day. And I kind of have a mission statement, that my mission statement is to build up edified traders every day.
Nice. I think that's a very interesting topic, because at the same time, this kind of social trading part is really, I think, powerful when you can have people who kind of push you to make the right decision sometimes. But at the same time, you have kind of people maybe contradicting yourself and taking opposite trades. So do you find yourself in that situation sometimes where two people have different opinions and then they, like, one goes one way, the other goes the other way? Or is it always together?
It's especially difficult when you really respect someone's work. They have a very high hit rate, and you see something. So, I will go lighter for that reason. But if I still see a 3 drive, I'm going to take it, or I have a divergent signal, like, there's, so a guy I respect, so much longer term gold bear. But I saw the potential for a trade yesterday. I even tweeted it out, be it scale in buyer down to that 1270 level, the 1260 stops, and had a nice pop. And now we're heading into a potential 3 drive. And even though a couple of people I respect are bearish looking for lower levels, I'll still try it. But you know what the great advantage is? And it never shows up in your account, but someone pointing something out that you respect, that perhaps you didn't consider, and then you don't take the trade, and it would have been a bad trade. And what traders don't realize is, avoiding a bad trade, it doesn't show up in your account, but it's almost as important, or even more important, than being in a good trade. So I find it an advantage. And it's probably more difficult for people that don't have enough belief in what they see to, be swayed. But, if you've done something or used a method for a period of years, for example, one guy could be bearish and I could be bullish, and we could both be right, just depending upon the time frame, right? So, everything's time frames, and no one's perfect. And really, the difference between pros and amateurs are pros know how to lose, so they have money left to be right.
Yeah. And I guess the other aspect what really helps is when you see other people who take the losses properly. They won't be frustrated because they have a loss. They will just stay the same. And when you have trouble taking your losses and you see that, I think it's really powerful. You kind of change pretty easily.
I use the analogy of an NFL quarterback, where, perhaps he makes a bad play and he throws an interception. The next time in the huddle, he doesn't come into the huddle and go, oh, guys, I stink. What a lousy play, and dwelling on it. So I actually tell people to have the word next. And an expression I heard that's really outstanding is, my next trade is my best trade. So, really a waste of energy to self-flagellate over a trade, and would have, could have, should have. They really don't matter. And, it's also important not to get too elated over a great trade, even if it's a windfall trade. Every trade should just be another trade. That's the right psychology. So if you're not getting too puffed up when things are going well, there's not as much air to deflate, to take out of you during a period of drawdown.
Yeah, exactly. And that's a good point. The fact that you should feel the same whether you have a winning trade or a losing trade.
Yeah, easier said than done.
Of course.
But, it's just really another trade. And, key things for psychology, to create a new paradigm for yourself, because a lot of these things are a new paradigm to how we're normally taught to think, is you really have to write things down. I'm a big believer in NLP, and something becomes more powerful and printed in your mind when you write it down. So I'm a little bit older than you. I used to update my charts by hand before everything was on my computer. And when I did, I don't anymore. But when I did it by hand, I knew every technical area because I was doing something, writing it down, drawing in the ranges, and it had much more of an impression on me. And that kind of brings me to another point that a lot of people think they have to be portfolio traders, ATN, and that they have to have 8 different positions going. But I grew up in the era of open outcry on the floor, before the computers took over everything. In fact, I remember when they first started trading currencies at the CME, the IMM, International Monetary Market, they were doing it on chalkboards. But the people on the floor, many of them, never left, Europeans would call them a trading ring. Americans would call it the pit. Never left one pit, but knew one market like the back of their hand. And, especially for newer traders, I say limit what you're watching to have better focus so that you know a few markets very well instead of a lot of markets not so well.
Yeah, this is a big one too. And I was told once by another trader that if you cannot remember the price of like the things you follow, you're following too many things. So if you cannot remember where the price is at for all the things you follow, you're probably having too much that you follow.
Yeah, that's a pearl. Yeah, that's great. Yeah, so I like that. I may use it.
Totally fine. Awesome. I'm curious to go back in time a little bit. I want to know how you started to trade exactly, and how did you get involved in trading in the first place?
Okay, well, that's you're taking me back decades. I graduated with a journalism degree in the mid-'70s. The U.S. was in a recession. A friend of mine invited me. I grew up in Chicago, down to the Merc. And actually, I went to the wrong building. My first trip down there, I ended up at the Merchandise Mart. I thought I was at the Mercantile Exchange, and I'm asking people, where's the trading floor? And they're looking at me strangely, and they go, this is Merchandise Mart, where wholesalers have their stores and show their lines. So I had to get back on the L and go to the CME, and I was up in the gallery, and back then on the floor, a real big market was the pork belly market, and all of a sudden it went fast market. That's usually when they're running stops and making new highs for the day or lows for the day. It says fast on the board, so brokers aren't held to their fills, because fills could be terrible in those market conditions, kind of like when there's air pockets, little mini flash crashes like we have now. And I just had my friend sign me on as a guest and went around to all the different operation guests and said, I really don't care what you pay me. I want to learn. So I actually started out as a runner for a firm called Dean Litter, which is no longer around, and learned the business from the operations side, and then took some courses in technical analysis at the Merc. And one of my instructors was a floor trader and needed someone to handle his book upstairs while he was trading lumber. So I got my Series 3, and that was the beginning of my commodity career.
Nice, nice. And how was that process afterward? Because it's one thing to know how to trade and to know the technical stuff, but it's another thing to execute and to trade right. So were you successful from the start, or did that take some time for you to become profitable?
Well, look, I'll be honest. I learned on other people's money. That's what most brokers do. I had an experienced partner, and I was learning charts, and I had good periods and drawdown periods. And, the business, I don't care what aspect you're in, it's kind of a revolving door because people are always looking for the Holy Grail. They don't have a lot of patience if things aren't going right. I don't know how long you've been in this business, but you know what? In the public's eye, you're only as good as your last trade, your last quarter, your last month, and really think that people, when they're making judgments, have to give something at least a quarter to make a viable judgment. But I had my ups and downs. I've had my accounts. I've blown out accounts where I would scale in. If it was a great buy there, it's a better buy there. So I've made every mistake, and I've witnessed hundreds upon hundreds of traders over the years. I've seen every mistake. So kind of my mission now is to help people avoid the landmines I've stepped on personally and that I've seen other people step on personally. And a lot of it is mindset. One of my favorite expressions, you know how every once in a while, ATN, you go into a trade, you have no drawdown, it's immediate gratification, there's no heat on the trade, and then you begin to delude yourself that you could do that all the time. But for me, it's the exception, not the rule. I found out that my tendency is to be early and recognize things before the market does because I'm looking at divergences and turning points. So I learned to piece in to a trade, to just put a toe in the water before I, jump in. And I never really overcommit. I'm a big believer in, even wrote a song about use less leverage. I think that's the biggest problem that traders run into is using too much leverage, having unrealistic expectations. And, if you have hit a trade and you're a good timer, what ends up happening is you end up in a period where you end up being right the market, wrong the trade, because you think you're going to be perfect. And through that experience, I've come up with a Pinkertism: don't expect perfection at the crap table. Because that's why I think scaling in, scaling out helps you overcome that. I'm a big believer in partial profits. And I'm also a big believer that if you're a swing trader or a position trader and you look at a daily ATR, and if you're not risking at least that, I ask people that I mentor or work with and tell them, if you can't be wrong for a day, how can you be right for a week? Yeah. So one of the major errors is people don't let their trades breathe. And so they end up getting picked off with their stops being too tight. Mr. Market's a mean guy. He wants to shake out as many participants as possible before the move they're looking for happens, then most likely without them.
It's powerful. I love that sentence. I think it's great. And
I handle Forex stop hunter.
Yeah.
So I look for situations like you had one today in Euro Yen. We took out the low from the high from last week, and now we're back under those levels. So stop hunting, I noticed when I was on the floor, and there were audible roars on the floor. Plus, when I was a runner, brokers were very interested in orders that had STP at the end of it. So they knew where the stops were. And I noticed that when new highs were made, new lows were made, there'd be that roar, that audible, the pit would get louder as they're electing buy or sell stops. And it also ended up many times at least being a short-term high and a short-term low. And I still think that happens without open outcry. It's just being done by elbows. So people say, Dale, well, how do you know where the stops are? Well, I teach people, I say, well, look at your chart right here. And if you were short, where would you put your buy stop? And most people are going to go to the next swing high. I'd put it over there. I said, well, you know what? That's where everyone sits. So you don't want it there. In fact, you may even want to wait until they're taken out, see if there's any follow through to take the trade. So I'm still a big believer that stop hunts happen, and you could trade into them like floor guys used to, especially when you have like double tops where, a market doesn't make a new high and it comes off and it gives people hope that are short because it didn't take out that high, and they even have more conviction and more stops pile up, that, there's a pretty good chance that the market's going to go for that liquidity. Mm-hmm. So I'm a big believer in shakeout moves and fading them.
It's cool. So I kind of want to get technical a little bit. And what you told me in the beginning is that you trade with the RSI. What a lot of people are going to do with the RSI is trading reversals. And I know there's multiple ways of like doing things differently. So could you guide us through an example of trade you took recently?
Okay, well, sure. One rule that's so simple and it's actionable is that markets rarely peak or bottom when momentum is confirming the move. So say you have a new high for the move and the RSI is making a new high as well. Now, I'm not saying you're not going to have a correction, but I am saying there's a high likelihood that after a pullback, that's not going to be the high. Markets rarely peak when highs are confirmed by RSI and rarely bottom when they're confirmed. They mainly turn after a few divergences have already happened. So knowing a market confirms a high is actionable because you're saying, well, that was one heck of a move. There's likely going to be that high's not going to stand. So now I have to put on my radar screen and break out my fibs or whatever else I use and look for an entry point because I know that's not going to be the high because it's the exception, not the rule of markets peaking on a confirmed high. So it's a pretty simple thing, and there are always exceptions, where a market could peak on a confirmed high, but maybe that's 10% of the time, not more than that. So that's how I teach people to use confirmed highs. And then I have a formula for what my best fades are, usually a couple of divergences for shorts with the RSI reading under 70 on the last divergence, and for buys above 30. You could have divergences that are happening, at 80 or 78. They're not as reliable to me because not enough momentum has waned.
Okay.
Capiche?
Yeah, very good, very good. And are you taking only the trades with the trend, or are you taking also the reversal trades?
So what I mentioned with confirmed highs and lows, you're going with the trend.
Yeah.
When markets begin to diverge and non-confirmations become glaring, especially if it's, say, for example, a rally in a downtrend, but on a longer term TF, but, on your 4 hour, you're getting a nice, up move, but your longer term trend is down and you start to get divergences. You could say, some people would say, oh, well, you're top picking a 4 hour. But I could say, yeah, but look at the daily or weekly. Where's the trend? So I'm really not, I might be fading a 4 hour trend, but not a daily or weekly.
And how do you deal with all of those time frames? Because I'm also a big fan of multiple time frame. I look at not only one time frame to trade, but how do you keep into account like all of them? Because it might be, for someone who's new to that, it might be very misleading.
Yeah, they're not always in agreement.
Yeah.
But for market terms, I really like to have them all in agreement, all the way drilled down to the 1 hour or at a minimum 4 hour. So, because you could start to get divergent signals on dailies, but that could, to turn a battleship around, it takes time. And it's also the magnitude of what it could do in the meantime is larger. So your daily is going to give you your first hint that, this market's not confirming, but it could still be confirming on shorter term time frames. So you have to be patient and wait for not just a daily to be diverging, but also the 4 hour and ideally the 1. I don't really drill down much beneath the 1 hour.
Like it. And one common thing that I see a lot with traders is that they kind of want to find their strategy. Like some people don't have anything right now and they just trade random stuff. So I'm kind of curious to know, how did you come across your strategy right now in anything you trade? Was it like a mentor who inspired you, or someone you took it from someone else, or built it yourself? How did that happen exactly?
Well, actually, the 3 dry formation comes from a guy that I never met, but a guy named J.R. Hill in the 70s. And I just saw that pattern repeating over and over and over. And so I was gravitated to it. And then I started, using RSI to try and filter out those by looking at RSI readings. And I would say that my RSI work is pretty self-taught. I mean, it's not rocket science anyway. But you'd be surprised how many simple things you can use in trading that it really doesn't have to be a lot of complexity. I'm kind of a fan of Forrest Gump. Like, I even teach people to use something as simple as 2 weekly closes for a reversal. I call it an off number. So if you pull up your weekly chart, all you have to do is count back 2 weeks, look at the close of that week, and a close above it or beneath it gives you the weekly direction. If we close beneath it and it's been going up, it's a weekly reversal. But what is even more interesting is that number at times turns out to be the high or the low of the week. Last week in the S&Ps, when we sold off, that 2544 level was actually one handle off of the 2-week off number. So there's actually trading opportunities off something as simple as that. So I teach people simple things that are powerful, and the two close reversals are, a pretty good example of that.
Love that. Awesome. And I guess you could even perhaps trade, and this is like just something I'm testing and maybe trying. You could even trade reversals off the weekly highs and lows to some extent.
Yeah, I've never done it. I was taught this, the close was important to me, and really something that I think I had to learn. I used to try and anticipate candle closes, which is ridiculous because you really don't know what kind of candle you're going to have until it closes. So to me, closes are a little more important than the wicks and the highs and lows, because that's kind of like the final vote with your wallet for the day. So I put a lot of emphasis and teach people not to try and get an edge by anticipating that we're going to have a down candle, because you don't know. And something else I used to do that I see people do that I tell them don't do that is, say, for example, Etienne, I'm looking for short in gold at 1300 and it's trading at 1280. I used to say to myself, well, if I'm looking to short it at 1300, why don't I just get long and ride it up there? Because that wasn't the trade.
Yeah.
Because there was no guarantee. If it got there, I was going to do it. But you see how your mind works? It's like, well, I should take advantage of that. I really believe it's going to go to 1320. I may as well pick up $20 on the long side, but that wasn't the trade. So it's a lot. It's 90% psychology and learning lessons, and like I said, having more than the desire, but having the perseverance to live through these things. I think it's important that people keep journals early on.
Oh, yeah.
So that they learn from their mistakes. They could actually see it, and they learn from what they do correctly to repeat it. And I don't think anyone should ever do a trade unless they know why they're doing it, what is the contingency that's compelling me to buy or sell at this particular price. If that contingency is negated, I'm wrong, so I know what my risk is, and if I'm right, what I'm looking for. And the best trades are like a great attorney. He doesn't go in with one piece of evidence and hope he wins the case. The more evidence, which we call confidence, right, you have to take a trade, the higher probability, higher quality trade it's going to be. So be a good attorney and build the case. And also know what you're going to do tomorrow, today.
Yeah.
The other big pitfall, I've seen it all, FOMO, analyzing on the fly, I'll give it a shot. No, if you don't plan your trade, your best work is done being ready and anticipating a trade or a scenario. It may not unfold, but then you're executing, you're not analyzing. And I tell people to do the same thing like on red events. Like someone came up to me after an NFP number that was a soft number and said, Dale, I was long the euro before the NFP and it was a weak number and the euro rallied 130 pips. And you know what I told him? Good guess. Okay? Because that's all it is.
Yeah.
It's a roulette bet. It's a red or a black bet. To me, it's not trading. React to the reaction. Don't predict the reaction.
Hmm.
Something like
Yeah, that's a very good point. And I think there's a time to analyze and look at the chart and kind of review everything you have to do. And there's a time for execution. But I think both times are different and they should not be done at the same time.
yeah,
If you
and you
analyze
know
and
what?
jump in right away, like it's not a good trade most of the time.
Yeah, and you know what? My best work, I don't know about you, is done on the weekend when the
Yeah,
markets
yeah,
are closed,
yeah.
and you have time to go over all your different time frames. And I write things down because if I don't, I'll forget them. So I'll have certain areas. I'll know where the off numbers are coming into next week that it might offer a trading opportunity. I'll know, whether or not something is confirming and I need to be looking for a break or a fib level or a moving average to, position myself. Your most productive time is when the market's closed.
Yeah, absolutely. Or early morning for me, at least. And
Okay.
you told me you wake up really early in the morning because I
Oh,
personally do
yeah.
kind of a daily review every day. So I look at my pairs and where they are and everything. Do you have
Yeah.
any routine like that you do every morning?
I get up at 3:30 here on the West Coast. And this is the earliest Blake wanted to move. Normally it was, it's an hour earlier than I have for, 20, 30 years. I get up at 4:30. But yeah, I would say I've used this expression in my younger cynical days, getting up early, that my life is like a farmer, up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of pips.
Love it.
So yeah, but I do and all day long, yeah, it's a process. All day long, I'm processing new information. It's an ongoing. It's like a living organism, and I'm also a big believer in correlations, but they break down. So what overrides a correlation is you have to treat each instrument like it's a unique individual and trade that. And you could use correlations for clues or something's out of line, but don't count on them because they work till they don't.
Exactly. Yeah.
Yeah.
Yeah. And that's a very good point. If you don't mind, I would like to ask you some questions from my listeners that kind of disseminated their questions.
Okay.
And Lance is asking, what are some things that you still struggle with?
Not riding trades to all the way to target. But I've overcome that by taking partial profits and trailing a stop. But that was always, my entries were always better than my exits.
Mm-hmm.
Now my exits are much better because that was earlier in my career, and I used to get first daylight syndrome, is what I call it. Say you're moving sideways in your account, you don't want to take a loss, you have a good trade. I'd have 20, 30 pips made, and my target was another 90 higher. I would take it thinking I could get back into the trade because I thought, maybe I'd be looking at too short of a time frame. Another way to overcome it is you may put on your trade on a 1 hour time frame, but don't manage it from a 1 hour time frame. Manage it from the 4 hour time frame. Because especially if you're watching the market, you're going to see something setting up that you may not want to sit through. And if you see too much noise, you're going to be too jumpy. So manage your trades from longer time frames. It'll be easier for you to sit.
Yeah, I think that's a great advice. And that's something that I also struggle with, the fact of not keeping your trade all the way to the end. And I also overcome this with partial take profit, which is interesting.
Yeah, because we want to get paid, right?
Yeah, of course.
And it's psychology too. So, really, it's the best of both worlds. Of course, you'd like to have the full position on for the ride to objectives, but it's better than not having anything on. So, if say you trade a full lot as your normal size in the market, so trade 2.5, okay? And I think anything from 30 to 50 pips, especially when ranges are compressed, you need to take it, especially if you're trading for a living, because you need to generate income and you want to get paid. So that way you get paid. If the market pulls back, say you were long and you took partial profits, and you still believe in the trade, you're recommitting with profits, not principles. And then after you've taken partial profits, you want to pull your stop up and never let that trade pull it up to BE as soon as you've taken partials.
Yeah.
Is my advice. And then you have no no pressure. All the pressure's off. You've taken partial profits. You pull your stop to BE. Worst case is you made partial profits on a position.
Yeah. And the truth is, you might make a little bit less profit overall, but it's just much better on your peace of mind and everything that's around. You can focus on other things. You can
It's money management
as you took it, and just everything stay the same. So
it's money management.
Exactly. Yeah, like that.
Okay, so that's not exactly trading. That's money management.
And it's especially what I see a lot is that when you trade higher time frame, like I do, it's kind of hard sometimes to stay like 2 or 3 weeks in a trade, or even like a month without any partial profit. So one trader I interviewed was telling me that since he's been doing trading for himself and not for a bank, he likes to take partial profit just to get this cash flow in over time.
Right. Yeah. So I think it's critical that people learn to do that.
Yeah.
So, and that means sometimes you may only have a partial on. Say, for example, I'll trade an area, and I may trade, my toe in the water with a 0.3, and then add another 0.3, as long as my contingency is still valid. And sometimes the longer a trade takes to develop, the more likely I am to have a full position on. But there are many times that, the exception where the trade works right away, I'm only going to be in small. But even if you're in small, you could still take part of it off.
Yeah, absolutely. Like that. Question from Ken. How long have you been testing your edge in the market? So your strategy, have you been doing a lot of backtesting, or how did that work?
I never really backtested. I just learned from the School of Hard Knocks. So I am a backtest.
But you did keep a journal, which is interesting.
Oh, when I was early on in my career.
Yeah.
I kept a journal.
Like that.
You get to a point where, you become pretty repetitive, your method, it becomes ingrained in you. All habits become ingrained, it becomes your paradigm. I think it's important for people, maybe the first 3-4 years until, I've interviewed guys like Jack Schwager. Okay, ever heard of him?
Yeah.
Okay. So I asked Jack, I go, what's the most important advice you could give to a trader? He said that they need to find a style that suits their personality. So some people come in, and I just mentored a guy who thought he wanted to be a day trader. And then after a month of being with me and working with me, oh God, I wouldn't want to do this every day. I want to be a position trader. So he thought he had the personality to be a day trader, but then after he got into it, it was just too much. He'd rather not have to, be at his platform all the time and, trade off of 15-minute charts. And so, he's teaching himself. He learned that wasn't compatible with his personality. So everyone has to go on that journey themselves to find it. Don't try and be anyone else. Just hold up the mirror and say, what works best in my life with this market. And you know what? I'm going to say something that you probably don't hear from any of your other guests. This is not for everybody. You don't there's no law that you have to trade. And some people would be better off putting it in a pro's hands. So, there's a fine line between, I would always say, you don't lose till you quit. But part of it could be is that, you know what? Not everyone is suited to do this. It really takes kind of a rare individual to do it, and to do it successfully, and to be able to put up with the grind and the ups and downs. So, don't be embarrassed if you've tried it and said, you know what, this is disruptive to my life, and I'm going to let it go. Anyone ever say that to you in an interview?
Yeah, some people say it, but what it comes down to is really finding what you're going to be able to excel in. Might be trading, might be something else,
Yeah.
of course.
Yeah, right. Maybe you're a better content provider. I've worn every hat, ATN, in this industry. Had my own IB. I've been a trader. I've been, a marketer. I've been a mentor, an educator. So, there are many different ways to go in the industry besides being an individual trader. I think that people have unrealistic expectations. Let me ask you this, since, I'm on both sides of the mic. What do you say to people when they ask you, how much money do I need to trade for a living? And I've had people come up to me and say, Dale, can I trade for a living with 10K? What would you say to them?
I would say no. But I would
No.
say that what really matters is not how much money you have, but how consistent you are. Because there's always a way to get money.
You know what I say? Yes, if you want to live beneath an underpass.
Yeah. Right. Yeah.
Okay. So
That's
you
a
know
good
what?
answer, but
You hear all the hype of it, and I've seen guys do 3-figure returns and stuff, but you know that most hedge fund managers, even in a prolific bull market like we have right now going on in equities globally, they do cartwheels, doing 25% to 35% a year on their money. I think that's a reasonable goal. So I think you set reasonable goals, and people have unrealistic expectations.
Yeah. I'm curious. You mentioned something that I'm curious about, and this is something that creates kind of a lot of I don't want to say hate, but a lot of reactions in the forex industry, in the trading industry. What are your thoughts on people who create content for trading but are not traders?
Some people teach and some people do. It depends on the content.
Uh-huh.
Some traders can't teach people how to trade. I mean, let me ask you this. How about successful football athletic coaches that were never players but have brought a team to the Super Bowl?
Mm-hmm.
Are they less qualified to coach people?
Yeah, see, this is exactly what I think, but most people don't seem to see it that way.
I
It's
know.
interesting.
Well, then let me put this to rest. Richard Dennis, legend, right?
Uh-huh.
Okay. He taught the Turtles, all legends, right? I mean,
Right.
all the Turtles are legends.
Yeah.
Well, you think Rich Dennis never had a drawdown? Rich Dennis had C&D Commodity, which was a clearing firm where he got paid for brokers just filling paper and made millions a year. So, I encourage people, like a lot of people say, oh, I want to quit my day job. You know what? The best traders in the world have multiple revenue streams.
Oh, yeah, of course.
Okay, but you know why? Because everyone goes through drawdowns.
Yeah, and it's much easier to handle the pressure and everything.
Yeah, Paul Tudor Jones, everyone has, he has a hedge fund. So what they can say, Paul Tudor Jones is not a good trader because he needs the public's money to have a hedge fund.
Right. Yeah.
And so, I hope that I put that to rest. I'm not saying that there aren't people that put out crappy content.
Mm-hmm.
Okay. But I don't believe that's necessarily true. That just because someone doesn't trade that you can't learn from them. How about that?
And the other thing that I kind of want to mention here and plug is that I've learned probably more from books outside of the trading world, like books from The One Thing and Power of Now and all these things, than trading books sometimes.
Yeah, because it's psychology.
Yeah.
And because it's a mindset and it's a paradigm. I mean, I recommend people look at videos from a guy named Robert Proctor. He talks about the paradigm and repeating and repeating, because your unconscious mind, all you have to do is really have an image that you have an emotional reaction or attachment to, and really you don't have to figure out how to get there. Your unconscious mind gets there. But, by the time we're 5 years old, we already have a paradigm because we're open. Before we had an ego or anything else to filter out influences, we're already formed by what we heard in our environment, from our family, from our parents, from our friends. So we already have a paradigm. So to shift your paradigm, it's effort and it's work and it's repetition. Practice makes perfect. So check out Robert Proctor.
Yeah, love it. I'll check him out
Lots
for
of
sure.
Okay.
One last question from one of my listener. This is Rolf. What, in your view, is the most important thing to remain consistent over a long period of time, over several years, like you've been in trading?
Trade small.
I think that makes a lot of sense.
Okay. I mean, people think it's too simplistic, but trade small and follow your rules.
I love
And
that.
find something, and like Jack said, I could go out and learn different trading methods, but you know what? I love the three broad pattern. And the problem is being patient enough to know how, be okay with not trading. It's another very important one. It's okay not to trade. It's okay to miss trade. So, he's asking me for one, there's quite a few, but, it's okay not to trade. Because people feel, oh, if I'm not trading, I'm not making money. Well, you know what? Sometimes we're paid to wait. So, it's that old, trite thing of being patient. But you know what? If I sit there might be 2-3 setups a week with the kind of stuff I do. Maybe not every day. But you really don't need to trade every day. You need to trade when your setups are there. So wait for your setups. In fact, anyone who's a surfer out there, the greatest surfers in the world, paddle out to the break line. And if you watch them, they certainly don't try and catch every day.
Mm-hmm.
I'll leave you with that one. Great surfers wait for setups too.
Yeah, that's a great analogy, I think. I love it. So, Dale, how can people find you if they want to connect with you or reach out and see what you're doing?
Twitter is a good place, at Forex Stop Hunter. And we have a free room at Forex Analytix. It goes from 8 a.m. to 9:30 a.m. Eastern Time. And that's www.forex, spell analytics, ANALYTIX.com. And if you just find me on Twitter, I'm always, posting the link to be able to get into the free room.
Awesome. And Dale, we have one question that I ask the guests all the time on the podcast. If you could give me one sentence of advice for traders, what would that one sentence of advice be?
Have more than one income stream and don't become completely dependent upon your trading income, because it's an impossible battle, especially if you don't have a big war chest. So have it start off as an avocation instead of a vocation, and give yourself, just like a college student before they get their degree, be patient with yourself. Because even when you think about it, ATN, even a guy who's a carpenter or an electrician or a plumber, they all start out as apprentices and then become journeymen before they become a master. So plan on it taking you not months, but years to have your breakthrough.
Love it. Really, really
Just
powerful.
being real. Just being real.
Yeah, no, it's right. It's really realistic, but I think it's really something that people have to hear and apply for sure.
Yeah. So I hope I've helped some people out there with over 30 years of seeing a lot of people trade and what I've gone through. And the most important thing is really be patient with yourself. And it takes time, and don't buy the hype.
Yeah, love that. Dale Pinkert, thanks so much for being on the podcast. It's been a pleasure to have you here today.
ATN, it's been my pleasure. I'm going to turn it around on you one day and get you in face and interview you. And only I'm going to grill you.
And that was it for episode 117 of the Desire to Trade podcast. I hope you liked it. Hope you got some value. And I sincerely hope you'll apply what you learned in this interview. As I always say, listening is one thing, but applying is another thing. And most of the result I got in trading came from applying things that I learned. That being said, if you have any question or if you want to connect with me after the show, check out the Facebook group over at desiretotradecom/group. I'm trying to be there active and look forward to talk with you. Enjoy the week, and I will see you in the next episode of the Desire to Trade podcast. Ciao.